Okay, so now that we have the recording going, good evening, everybody. Thanks for joining tonight. Um, we'll uh, we'll post this on YouTube and on the Substack over the next couple of days. So when we look at this, so we were just talking about this quote about the pullback near the 30-week moving average being a good time to take action. And so while the 30-week moving average isn't something that I normally look at, it's this purple line here. It's starting to trend towards the 0.618. And I anchored these two momentum crossovers. So this is when RSI would have crossed into the bullish zone for us. And so, the 618 is an area of deep value in during the context of an uptrend, and that's starting to align to this harmonic level down here, this 0.75 at about 61, 65. So between 6150 and call it like 6200, it seems to be where that thing's trending. And so that's not a prediction that we would see that level, but it's interesting that the 30 week is trending towards an important area, as well as the AV from the very bottom of the April move is trending towards that key level too, and that's right at like the top of a area of density in the volume profile. So again, like not a prediction that we'd see that, but if we were to see a retrace, I think that's an area that the market would be really, really interested in. And we would probably see other buyers step in or see a lot of either stop loss, shortly below it around this 786. Like we know that when we cross that threshold, we tend to see retraces a bit deeper. So if we did see something drop down that low, I would be looking for buyers to try to step in and bulls to defend the uptrend around this 6200 level. And if that fails and we slip through, about like 6050, I'd be looking at that as much riskier for us. Um, Now, if we take a look at, so we've got our earnings calendar. So we had the banks report on Tuesday, and I think we had a couple today, but like the bank earnings that we saw were pretty good, and they were actually a bit more aggressive than normal on their forward guidance. So that's a good sign, and the market got a little bit of a boost from it. The TSM reported this morning that it looked like their earnings were pretty good as well. So the AI story remains good. The finance story remains good. So we've got a little bit of challenge for us in the market, but I think there's things in the macro environment that can sustain some optimism over the near term. So that's a good sign. And that's all I had for the PowerPoint, and then we'll take a look at let's take a look at a few charts. And we'll start with some of the trend stuff. So looking at our trend health, we've got, so we'll touch on a few of the good things and then some of the things that look a little bit riskier to me. So in terms of the major asset classes, the strongest areas right now are bonds and gold. And so that's kind of a risk off stance for the market. And not as encouraging as for equities or for crypto or anything like that. But what's important for us from a trend standpoint is going to be whether you've got the equities showing a little bit of weakness on their shortest term measure, and commodities have a really similar look along with the Dixie. So if we see treasuries deteriorate with equities picking up, that implies that we'll see continued strength in equity. If treasuries deteriorate and we start seeing commodities pick up, then we're maybe like a little bit later cycle or later stage for this part of the market. And so that's what I'm always looking to see with these asset classes is which one is going to take the lead next. And if we get into seeing commodities and Dixie with strength, then that's fairly bearish for equities and your more speculative assets. Looking at the 5% drawdown signal, we're back in above the middle half of this. So we're we're less than 2% away from all-time high in all three of the major US indexes. And we need to stay above this 5% threshold until the end of the month. So about the 29th for the S&P and for the NASDAQ, and it's the 24th for the Dow. So the Dow making it to the 24th without falling 5% below its all-time high, a recent 52-week high, that would be fairly bullish. It would be a good signal for the other major indexes as well. But again, we don't. This is still very bullish. So this is in like the good news category for me, because we don't have a we don't even have a signal yet to respond to. And then so then we take a look at this. This chart is the one that compares, the condition of the S&P being above its 200-day moving average and the number of companies in the S&P 500 that are above their under their 200-day moving average. So this is still bullish. We've got the threshold is 45%. So 45% of companies, less than 45% of companies are under their 200-day moving average. So 55% or more are above. So that's bullish for us, and the S&P is still in a rising 200, a rising bullish trend and above a rising 200-day moving average. So it's very like conformational type of indicator, but tells us that we're still bullish. Now we get into some of the other like slower signals all remain favorable because they're slower and they're conformational in nature. The rest of what we see is a little bit more concerning. So like the VIX is continuing to make a new high. What's interesting about it is the S&P is making a higher low on a day that the VIX is making a higher high. I'd like to see what that looks like after we get past this week's monthly options expiration. Could see a little bit more volatility around OPEX, and I know that a lot of the gains in the market have come on the back of the companies that are getting short squeezed, like some of the AI names and the satellite companies and things like that. So once we get past like Rocket Labs this Friday and things like that, crushing the market, maybe we'll see either VIX cool off or follow through from the S&P. But right now, this is kind of an interesting look with a higher low and a higher high between the two of these. And we're looking for the Keltner channel, this upper green band. We're looking for that to roll over. We want the VIX to fall back through it and then have that green line, curve, flatten, and roll over like it does right here. And that's when we know that we've seen the local low in the S&P, and it's safe for new money to go into the market, for me anyways. This is the contango look for contango slope for the VIX, and that's in a really kind of upward curve. So this is the shorter term EMA of VIX divided by the 6-month VIX, and then that's divided by a longer term EMA, and so that the slope of that moving average tells us that you're in a more volatile environment. The bottom indicator on this tab is looking at the dispersion of the VIX. So it takes all of the durations of the VIX and compares the distances between them. And this is as low as I've seen this indicator get since, maybe, back in 2022. So that's fairly low. This tells us that the market thinks that the market's right now pricing in the same volatility that we have now in every duration of the VIX. So we think it's going to be as volatile today as it will be in 9 days, 3 months, 6 months, and a year. And so that's unusual. That means that it's going to kind of correct and pick a path because we can't every duration can't be right on volatility. And then we're comparing that to the top line is the S&P, and then the middle one is the high beta ETF divided by the low volatility ETF. And so that should be a more bullish look, than the S&P. That's what's interesting is that the S&P is coming down a little bit, but that high beta divided by low volatility is still showing a little incline, and that's why I think this week's options expiration is going to be interesting. With the drawdown of the S&P last week, the short sellers and the bears might have gotten a little bit excited on some of the high beta names and meme stock types of companies, and they might have opened themselves up to a squeeze. Once that comes through on, falls through on options expiration, maybe there's more downward pressure for the S&P. But right now, this is a fairly interesting look for me to see the dispersion between all those durations of VIX so low, while high beta remains a little bit high. This is probably the most alarming one that I saw in my charts today. So the yellow line is high yield credit spread, and similar to like the relationship between S&P and VIX, the high yield credit spreads and the S&P will have an inverse relationship. And so the rates of change in this middle are on different axes. Otherwise, one's a lot flatter than the other. So it's tough to because they're on different axes that aren't normalized in any way. It's tough to make an inference about them crossing over like this. But it's the crossover is just an indication that we've got a very strong trend from one of them in one direction, switching with strength of directional change with the other, and it's equivalent for the time series, I guess. But these crossovers, I'd say a crossover can be as meaningful as a touch, right? But in any case, they're clearly moving more strongly in the other direction than we've seen in some time, like probably even going back into like 2023. The third indicator, or the third area down, is our correlation coefficient. And so these are supposed to have an inverse relationship. And so they should always have, in a steady state, they should always have a negative correlation. And the most that we tend to see is like a neutral correlation. They'll move to zero. And then that tells us that both of them are moving in the same direction at the same time. And similar to the VIX and the S&P, if they're moving in the same direction, one of them has to pick a path. They're not going to go up steadily together. And so in this case, we need to see if high yield credit spreads spike while the S&P draws down, or if this resolves with credit tensions easing very, very quickly. It can resolve in either direction, but what we know is they won't continue in this path together. And the Copic curve is another form of measuring a rate of change. And in this case, it's when it's green, it's because there's a negative relationship between them, and the high yield credit spread is not moving upward very quickly. So when the Copic curve is red, it's above zero. And right now, it's the highest that we've seen since the April drawdown, and it got pretty high up there in April. Like April's was the highest that I'd seen it in about 5 years since the 2020 COVID crash. And right now, it's not like a meaningful high. It's just the highest that we've seen since April. So we're going to want to see something in the credit market improve for us to be confident that equities are close to a low and ready to rebound. And if you screenshot this or catch it on the replay later, this is a BAML H0 A0 HYM2. There's some others that are there's an even better one to look at that's like triple C rated. Bonds and things like that. So there's a lot of ways to look at credit spread, but this one I've looked at most consistently over the years. The volatility weighted put call ratio, this one is continuing to give us a warning. We're starting to see that more extreme downward slope in the conformational portion of this indicator, and we should expect at least a volatility or a drawdown uh, format or scenario similar to, this April 2024, maybe even like, the July 2024, when once we start to get, a sharp break below, multiple alerts from the leading indicator and then a sharp downward movement from the bottom. Now, if it doesn't clear the zero, like if it doesn't get much below zero on the conformational indicator, maybe we get a bounce back like we did at the beginning of 2023 or the fall of 2023. But once we start to see it fall below zero, then we're probably looking at multiple drives lower, and that's okay. Like you want, if we have an orderly retrace, we know how to work with that. Like we can, buy lows and sell into overhead resistance, expecting the market to, try to make up its mind for a little while. It's a different type of strategy, but it's the type of, even if we don't follow that type of method where you're buying at support and selling into resistance, at least you try to anticipate the market behavior, and then we're not surprised with what we see. And taking a look at this average true range model. So this is taking the average true range and dividing it by the 200-day moving average. I think it's the 200, but just gonna double check. Oh, so I'm dividing the moving average of the indicator is 42. It's a 21 period ATR, and I wonder if I can. Yeah, I think so. I think that's what I think it's referencing against the percent of the 200. But when it's rising like this, we've got a steep breakout. This means that the range of movement, the day-to-day range of the S&P is picking up steeply into an uptrend, and those tend to see reversals in price action. And the indicator right below it is on a weekly basis, and it's much more reliable. The upper one could be noisy. So this could be noisy, but what I don't like is the strength the strength normalized tricks, which is a triple smooth moving average. Um, this is combined with a strength oscillator, so the steepest movements come at the beginning of trends, and then it's supposed to flatten out. And so, sometimes you see like, momentum divergences. It's totally normal to see a divergence of momentum with this indicator, and that's what lets us use trend lines with it over long periods. And so you've got this long trend line of supporting the uptrend, and once that's violated and broken, you can see consolidations and then deeper drawdowns, and you can see it going back throughout the years. So yeah, grab a drawing tool. So once you get one of these like, lengthy and consistent trend lines on this thing broken, then you get all this shakeout, right? And so we've got volatility picking up, and we're falling through that indicator right now. Now you can get a really healthy bounce back, and it could come back up and find resistance into that moving average, and I would take that as a selling signal. And I'm not long-term bearish. I just think that some of this deterioration is concerning. Um, breadth, I don't think breadth looks as bad yet. It's a little bit concerning, but you've got the longer term cumulative new high minus new low with its 50 period moving average. This is still, upward sloped. It's got a nice distance spread between itself and its moving average. It's not rolling over yet. So that looks fairly favorable. The NYSE volume, this tells us if a directional move has peaked or not. And so this volume has been steadily coming down, and it's starting to pick back up, and it's telling us that, maybe we've got a little bit of a trend change in trend for breadth when the NYC volume changes. And then on the bottom is a 10-day rolling new high minus new low. And it's not like it's crossed over its moving average. You've got a divergence with the market where you've got a lower high in on the 9th of October versus the 23rd of September. And so, that's not good, but it's not a great sign. We had another one back here um, between the high in July and the lower high at the end of July, and you got a little bit of a correction, and we went right back onto a bull run, right? So, um, it's got a complexion of something that's rolling over, but we could have made that case back here. I think it looks a little bit more like this area than it does the move before the April drawdown. It doesn't give me that kind of a vibe, like maybe even something like in here it's more consistent with. So I'm just not as concerned about breadth yet, even though it's giving us a little bit of a warning. And then this is the binary model where I just do a binary score for the volatility put call, another one for trend deterioration, and another one for breadth. And then we combine them all in the upper. So we got a warning signal on Friday the 10th from the combined indicator for the first time since April. And so we got the first one in February. Then we started the market drawdown. Um, it gave us like it starts to tell us when it's moving into a more favorable stance, and that was just really just the bounce in between. But in this case, it's spiked high and it started to roll over really, really quickly because trend deterioration is not it doesn't seem to be worsening these last 5 days. It seems like, it's just a little choppy, right? And breadth, we only got the one signal on. So, we've got some warnings, but I just don't think it's very dire yet. Other than that credit piece, the credit piece could get, if that got worse, that would be concerning. Now, Bitcoin is starting to worry me a little bit more. You've got the cyclic RSI for Bitcoin is now putting in, it's like retesting a low. It's broken below its lower band. You've got the cyclic RSI for USDT dominance way above its upper band. In fact, we've never seen a bull market in Bitcoin continue with the USDT dominance and its cyclic RSI looking like this. Once you get into that type of area, the bull market for Bitcoin is temporarily stalled, maybe even retracing into a consolidation for a while. And on the USDT dominance itself relative to that key anchored volume weighted average, it's bounced way up above that. It's further above that AVWAP than it has been in about 3-4 months, and it's starting to approach the high from June. And in June, Bitcoin would have been down to about 103. So that's not a great sign for Bitcoin. And then when we look at Martin Pring has the indicator KST, and then he's got one called Special K that uses 4 different KSTs. So they're just different ways of looking at rate of change. And this one's supposed to be like a long and slow moving one. So applying it to Bitcoin has been relatively consistent for tops and bottoms. And I'm not calling it like a top in Bitcoin, but because I've been punished for that before. We would have called it back here, and then we've gone on to make this higher high in October. But what we see is that it's rolled over its moving average, and it's not reclaimed this moving average. So our momentum is cooling and finding resistance into its own moving average across below zero. is usually a deeper retrace for Bitcoin. And then the softer blue line in the top is the third. So this one uses three KSTs in one for the special K. And this version of it uses just the third KST. And so that, I've noticed that when that third one rolls over and falls below zero, that's when we go into consolidations for Bitcoin. It's kind of hovering around that right now. So you can see when it came back above zero in May, that was our, a really reliable buy signal. Anytime it comes back above zero, it's been pretty favorable for Bitcoin, even in these like consolidation years. So anyways, those two KSTs are looking a little bit rough. And then on the bottom, we've got the S&P plus the Dow plus the Dow utilities divided by total bank credit. And that is, like we saw with the credit spread chart, we've got a little bit of challenge on credit spreads. And in this case, those indexes divided by total bank credit seems like it may have, reached like a leveling off point. If it doesn't rise from here, that'll put some downward pressure on the more speculative assets and will take liquidity out of markets. And then lastly, for the charts before we start to look at some of the individual ones, this is a Larry Williams type of indicator that looks at relative strength and then momentum of relative strength. So the first one is looking at treasuries versus the dollar index. The second one is Bitcoin versus Bitcoin dominance, or Bitcoin versus, sorry, let me just double check. It's using Bitcoin dominance versus USDT dominance. And then we've got equities versus treasuries, gold versus commodities, and then commodities versus the dollar index. And so this is a pretty reliable way to know when we're going to see a nice move out of one of the indexes versus the other. And right now you've got Bitcoin reaching the lowest point in this momentum indicator that it has since March. And then in March we were only once we got to that point in March, we were still early into the when we first crossed it in February, Bitcoin was still like making a top. So if this deteriorates further, we should expect to see Bitcoin fall further. Equities are at their lowest since April. It makes sense that we would see, Bitcoin make its move lower before equities. In most instances, that's the case. But you notice that like Bitcoin started to show its improvement before equities. So it should, we hear a lot about decoupling, but Bitcoin's, very speculative relative to the broad equity market and probably will be for some time, despite the amount of institutional money coming into it. So we should see Bitcoin start to improve. Once it does, that should be a really good sign for equities. And gold reached a point in this measure that is the highest since April of 2020. So this confirms what we're seeing from the metals market, that the gold is absolutely ripping. What's I think that the biggest takeaway for this right now, though, is you've got I'm going to hide a couple of these. A couple of things look interesting here. You've got treasuries with maybe the best look that we've seen in some time. So, when this breaks above zero and the moving average of the indicator is upward sloped, in this case, in these cases, the indicators, the histogram is breaking above zero and the moving average has remained above zero and is now upward sloped again. This came after a period of fatigue, but we should get at least a near-term bounce in treasuries. So this tells us the market is anticipating higher rates or sorry, lower rates, and that means higher treasury prices. So probably not a bad time to do if you're holding TLT or treasuries to take advantage of selling into some rips, but if uh, if chasing this, I personally probably wouldn't chase it. Wait too much longer to add to a position in treasuries to take advantage of this bounce. And then looking at commodity index, this we've got a lower high that we put in on the 15th. The low was on the 10th. This is not, we don't want to front run a movement on this indicator. It's punished us on commodities in the past. It looks like it's flattening out. The slope of the moving averages is decelerating. If that curls and we start to see commodities make a favorable move, these can, especially when equities are down, gold is overextended, and there's inflation concerns. Um, we could see a nice movement out of commodities, and we're seeing it in the metal space. So if it expands to some of the other commodities, I think this is really held down now by energy, but this is a pretty good signal. If you're starting to see something favorable in commodities, what I'll do is I'm gonna share this chart, and I'm gonna share it in the group chat. But I don't publish this one. This is a private indicator. Um, but I'll share it with you guys if you want to bookmark it to look for like use this for confirmation if you see something in the commodity space that you want to pursue and see if they're really making a move or not. Then I'm going to change to a different set of charts real quick. So taking a look at just intraday with the S&P, um, we looked at, let's see, I'll turn the wedge off and the draw. And so looking at the at this drawdown that we're working through, we've got the orange AVWAP from the start of the drawdown. The red is your daily high for the S&P. You've got the green anchor to the low of the move thus far, and then there's a thin red one that anchored to the intraday high today. And then these are harmonic ranges that the way that I do these, I'll generally uh, start with like an anchor from a high and then the next low, and then I calculate the range separately and then anchor them based on that calculation. So you get a range from it, and then it's like an octave. So each of these are a harmonic within it. And institutions tend to follow these harmonics pretty well. They tend to be, I think, a little bit more reliable than some of the Fibonacci forecasts that I anchor until you get into like real speculative price discovery movements. Then I think the fibs are a better way to go. But so I'm watching these ranges, and we're seeing like the intraday move today, kind of bouncing in between these really cleanly. I'm gonna move this one out a little bit. So anchor a new one to the day, and you can see it. It crosses over, fails at one, it goes to the next one, fails, comes down, finds support, comes up into the AVWAP from the day's high, it comes back down, revisits the harmonic, now it gets into the lower. And once it gets into this like in between the like 60 and 70% of the way through the harmonic, it gets down into these green ones. That tends to be like an area of resistance, support or resistance, or where we see like a consolidation and a reversal. In most times when it's, especially if it's anchored to like daily or weekly data. But so it's a very structured movement. You've got, we gapped down into this low on Friday. We gap back up on Monday. We fill that gap on Tuesday, fill the Monday to Tuesday gap, and we get a little bit of a tease. But this has a look to me of um, if we come back out to the 30, like we're not seeing it reclaim the red AVWAP from the all-time high, and we're not seeing it reliably stay above this orange AVWAP. Like you're getting your most volatile movement, like he bounces off of it and dips through it. It's like it's kind of teasing us. So we want to see it, get up above these AVWAPs, hold them as support, and bounce off of them. But what probably has me a little bit more concerned with the structure of this is, I'm not a big rising wedge guy for as far as chart patterns go, but we can make a pretty good case for a rising wedge and this being, a clean set of touches. So you've got 1, 2, 3, 4, 5, and then you break through, right? And so these are um, these are okay chart patterns. There's some like if I see a high and tight flag, I like those a lot because they've got a combination of, I like ones that have either very low failure rates, or if it's got a high failure rate, it's got, a very, very large uh, average performance, right? And so this one, you've got a failure rate of 24%. So these are successful about 76% of the time, which is pretty good. But you've got, and there's much better, like high and tight flags have really high win rates. Um, the average decline is about 20%, with the most likely being 15. So if we were to look at the decline from the break below this wedge, that takes us the SPY from where it is now at about 658 down to 648. So that's another $10. Um, and then if it made, the average of 19%, then it makes a lower low, taking out the Friday low. That's actually not an awful scenario. A lot of times you see these drawdowns kind of resolve that way. Like if we go all the way back into that's a 5-minute chart, so I'd scroll for a little while. But if we go all the way back into like, the some of these don't have that like that wedge type of look to them. But you can kind of make a case for a wedge up in here. You've got the break below. They call this like a throwback, right? So when it breaks below, it's called a pullback, and when it breaks above and revisits the top of the pattern, that's technically called the throwback. And not wild about the phrases, but that's what's in the CMT book. But so you've got that break below, and then the pattern completes down here. This other retrace I would consider to be a separate event from what we would forecast from a break below the wedge like that. But it's not, it's not out of the norm, or it's normal to see those types of price behaviors during these corrections. You can make a case for this being a bit of a falling wedge right there. So um, back to a 30-minute look. So that tells me that, once we get past this options piece and we see is this, going to be a shortened move that maybe stays within this range before continuing higher, or does it, make a new low? That's what remains to be seen for me. I guess like the last thing that looks interesting to me. So there's a paper that you can find on SSRN called, it's been around for a while, but it covers an intraday momentum strategy. And I don't trade the strategy, but it uses standard deviations and ranges for the S&P, the SPY ETF, and it uses a 1-minute chart in certain times of the day. It looks to see what direction the S&P is based on which one of these standard deviation paths. And it's like an average of the last 14 days intraday data that the standard deviation is built with. And so if it, by 10:30 in the morning, if it is still at like the bottom standard deviation, then the trading system calls for you to be short the S&P. If it switches and it's along the higher band at 10:30, then you go long. And so the standard deviation that it's touching tells you whether to go short or long, and then you completely exit at the end of each day. It's, mathematically, its back test is pretty strong. I don't use it, but I do like to check it once in a while because the normal thing for this indicator, and you can find the noise area indicator in the community scripts and trading view, but the normal behavior is for the day's price action to stay near one of these two standard deviations. So you kind of get a sense for how the day is most likely to play out by taking a look at this. When it's in the middle like this, that's unusual. And you normally don't see it on follow either band during the day. It's usually one or the other. And so when we look at the last few days, it's a little interesting. You've got, the drawdown on Friday, it stayed along the bottom, which is normal behavior. That bounce on Monday that we talked about, in the Substack, that we might see like a retail driven bounce on Monday. That occurred and stayed right near that upper standard deviation line. Then we get Tuesday's price action is like weirdly in the middle of it. And then Wednesday starts upper, comes down to the lower, and back to the upper, and then today's all the way along the bottom. So this tells me that we're seeing a market that's a little bit confused about about the battle in between bulls and bears in the market, and that hasn't resolved yet. I probably want to see, if I'm going to participate in a bounce, I probably want to take a look at this and see that it's actually hugging like the top of the standard deviation path before trying to buy bounces in indexes or add to positions that are shorter term for me over the next couple of weeks. Then a couple of the astrological charts. So today was the area of interest for the S&P. We got the bounce up into the uh, ascending angle in the Gann fan and right up to the square of 9 that's anchored back to the solar eclipse, and then the reversal on the 16th today with the wick low to this intersection between the two Gann fans. So a bounce from this area would be normal, but these are volume candles, I think. These are volume candles. So we have pretty decent volume today. But I would look for, in a bounce, we're gonna want to start to challenge the top of this larger candle, and we want to see, I want to see a little more volume before I get too excited about it. On the intraday, it's respecting the ascending angle. So even if we did see that, um, that break below a wedge pattern, I would still be pretty confident that we've got a good long-term bull case, because even in the context of this drawdown, we've seen speculative names hold interest, and we've seen the overall movement of the market respect ascending trend lines. On the Bitcoin one, this is not as favorable for us to see, at this turning point, finding resistance at the ascending angle and the square of 9 level, and now we're falling through the next ascending angle and through the square of 9. This opens up the door for lower 100s, possibly even a conclusion into the upper 90s, which is and not the direction I was hoping for Bitcoin. I was hoping to see the Venus interval 2 conclude somewhere around, probably about like 125 to maybe even 130. I think that's going to be much harder for us to pull off over these next 13 days. So with that as an overview, What kind of questions or what kinds of things are you guys seeing? Anybody have a chart request? Yeah, we can take a look at PSNL. Let's see. I'm trying to see if I have my other chart. What was the news on PSNL today? Oh yeah, I've taken a peek at this one before. All right, so I know we've looked at this one before, and we have the AVWAP from IPO, um, and it looks like we're finally going to challenge that AVWAP. So we're above the AVWAP from all-time high, which is really good. And now once you get above this AVWAP from IPO, um, that this should behave as if it's in price discovery. And let's calculate a range for it using that Jenkins method. So if we take sort of Magneton, if we anchor it to the August low, and then we look at the September consolidation, it's really shrunken down, but then we've got 441, 573 brings us to a range with a top around 1656. Oops. And so, yeah, this is pretty awesome. You've got, this showed us, if we look at it on a 4 hour, so when we use this method, like it's helpful to, you want to anchor it, you want to do your anchoring to closing price and not the candle wicks. And this follows more of like an institutional flow. And you can see that it's very orderly. Comes up, hugs this first harmonic. We break above to the next one, gets a little resistance, breaks to the next, down for support. So I think what we'll see probably is you've got this AVWAP from all-time high coming through, and you're at this harmonic level at 1048. Maybe it bumps into a little trouble here and revisits a portion of the lower harmonic before getting into this range. And then I'd say that like 12 to 1352 would be a normal area for us to see it have a little bit of trouble. Even though it's got good news going on, so oh, that's right, it's the AV up from IPO. So it's got good news, but if there's broader market pressure, maybe it breaks above that and gets caught up for a little bit. But you can also almost make a case for, I think, for a high and tight flag in here. Maybe it makes a high and tight flag into this area. And I would look at that as like a buying opportunity, let it consolidate a little bit and add again. Yeah, because you've got high and tights in the past price history. Like you can make a case for one back here. high and tight comes up. So that looks really good. I'd say if if it sells at about the 11 mark, you maybe look for it somewhere around like 1050. Yeah, let's definitely take a look at Tesla. I think I think we've got some nice opportunities on Tesla. I'm in this with shares and with some options. So this I've been sharing this one when looking at examples of a basing pattern. So it's a lot on this chart right now. So we're above an interesting, you know, area of volume in the volume profile. But it's really kind of smoothed out, which is what you want to see when you come out of these basing patterns, is that we've, built a like a steady um, platform of volume to support price moving forward. Hate how busy this one is. But so we called this like last fall when we said, hey, we're at the top of a base. And we said around like the November timeframe last year that when we get to this base, we've got, about 780 bars. We should expect to see a harmonic of that behavior play out over the course of 1/4 of the base. And in fact, we had like the same kind of behavior going into the base. Like you've got like, this basing pattern that it pulled off over here, and then 1/4 of that into the new base, right? So that's very normal for these. You get this wide pattern, 1/4 of activity that can either be a break above and then a retest is normal. Sometimes you get like, 1/2 the base arcs up and over. Usually you come back to it at some point. And then other times you get this like cup and handle, which is what it's done now. So um, we definitely need to see it get is a couple things I don't like. I don't like the cup and handle to fail on like a declining um, close like it has. That is not a great sign for it. But when we look at, you can make a case for, just leave the high and tight flag on since we have so many in the marketplace right now. Just slows the chart down a little bit. You can kind of make a case for this being a flag, though it's in more of a rounded top, so it's really not quite a flag. But yeah, I'd say that once we get up above, we want to see it like let's get our more current AV WAPs in here. Put one in front of this gap down here. And so we're going to want this AV WAP from the September 4th gap to hold the support. And we want to see it break above the one that we've got anchored to the high on October 2nd. And so once we break above this, I'd say the near term move is likely to be, almost like a triangle breakout. Um, what, yeah, like we don't have like a diamond top type of pattern. We didn't make a low in the middle of this. This just looks like a little bit of consolidating behavior to shake a few more bulls out of their money, and then it probably comes right up to the very top of this base from there at like the 505 level. And then my long term for this, like I'm very bullish Tesla. I think they've just got a large role to play in the industrial space for the US. I think they've got a lot of speculative story to them. There's a lot of liquidity in the name. And even though you have these like dramatic movements, like you can make 100% return on a company like this over and over again. So I do think that, at some point we're going to see Tesla up until like 580 to 650. Um, that's my thesis for it and why it's part of my long term, and I'll continue to trade it. But I'd say a break above 435, I would really like it for a move to lower 500s. That's a good one. So Um, let's look at before we look at CCCC, let's look at I'll tell you one thing that makes me nervous is every now and then you have to like listen to Bloomberg or CNBC just to make sure they're not talking about your favorite stock or something. But they're talking about biotechs and small caps an awful lot. And when the retail shows are talking about things that we see, sometimes the crowd is right, but that starts to make me nervous. So in biotechs, we've got these wide bases, and we're breaking out of a wide base. We can see that the last rectangle pattern that we put in from 2017 through 2020 um, almost gave us a perfect forecast for it would have forecast 180 and the high ended up being 174. So you can get these like insane movements. You could almost make probably a similar forecast if you were to call this like a rectangular pattern here into the high of 2015. So I want to give this a lot of flexibility. I'm in some long calls for XBI and I'll pick some speculative names for the the smaller cap pharmas like this. But the thing to be aware of, there's we're above the AVWAP from the all-time high. So this can behave as if it's in price discovery. Um, they'll if it's got too much retail attention, we might see um, some pressure come in from from bears and things. But some of the short squeezes are pharma names right now. We're getting into this 107 to 115 range. That would be a normal area for us to see a little bit of consolidating behavior, maybe even to like put in I just love saying high and tight flag, but like if it gets up to like 115, maybe it creates a flag back down to 107, and then that gives us our um, measured move up into like 135. But I do think that like, if we're patient with it and we let the trend um, do what it can, I think we could see 135, 148. I think this measurement that I took of the width of the base in a ratio to price, I think that's super extreme. I don't think we get there, especially with headlines coming out about pressure on medications and things. I think that will take the wind out of the sails for pharma once in a while. But if we look at the high and tight flag um, in this breakout, you've got this breakout that comes back and revisits the top of the base, which is normal to see. And then from the break of that flag, that gives you a forecast right into a good chunk of this movement as well. So, so if I, in any case, like if we see this break high, I'll probably be taking profit into 115 to 122, and then looking to accumulate into 10, the 110 to 107 area after that move. Like this is something I want to stay with. So if we take a look at CCCC, I've never charted this one, so that's good for the long term. So you've got a long tail up. So what's interesting is like when we look at the point and figure charts, this will show us whether a trend is like, despite what the time anchored chart shows us, like this will tell us how fatigued a trend is. So because of the number of ranges that it blew through today, that makes this a very lengthy trend. But it still doesn't have a breakout until we get above about 320. Let's see if we know that it broke out on news today, but just want to take a peek at the cycle tool. So the cycle tool would anticipate a move higher for sure, but the cycle tool does that with um, with things that are at the extreme of their trend. But in this case, like the cycle tool is helpful when things are in a big base like they are. Uh, oh, are they diluting shares? Ah, interesting. Let's take a look at that because I would have expected to see closing price down quite a bit um, off of a new offering. Oh, so this is with warrants, right? So it's pricing 125 million with warrants. Hold this in here. So you've got in pre-funded warrants. So that means that people buy the warrants. That's almost uh, like an option contract through like directly through the company, and so they have the option of converting them or selling them. So they only turn in first time offering 22 million shares. Okay. All right. So they have to convert to become shares. So that's about a fifth of this is going to be warrants that could convert to shares, and the rest is with shares. Interesting. Oh, yeah, I'd have to read this a bit more closely, but it sounds like these have to the warrants that are going to be in the offering will have to convert in order to actually dilute shares, which is why we're likely not seeing much of a negative reaction. So if it gets a positive reaction, that should be good for the stock. I wonder if I have. I don't think it's going to be in here. No. Yeah, so I'd say this one's going to be goofy because of how much higher the volume is in the past. So it's probably going to run into some trouble around, like if it gets up to seven, which is still, would be an awesome return. And that's exactly what happened, back here in April 24. Got up above its, ran into resistance two times at its AV bump from IPO. Even in the sequence before the breakout, you get a little stall retrace into like you've got a base and a cup and handle, then it breaks above. You make a case for a high and tight flag exceeding its target, and then it rolls over and comes down. So we could see, I would actually wonder if we would see like a fractal of this behavior. If you get a nice break from this, like you see like a big gap up, we'd probably see it like like some type of behavior like that again, where it fails into this AV wrap a couple of times before breaking up and over it. Oh, WRD pony, and let's start with Joby, Jess. Yeah, so Joby made it to the top of that range. It looks like we've got maybe a cup and handle type of pattern from this base. I don't like when we've said this before, I don't like when the bases are, formed with a lower high. But that's 44 bars, so we'll take a look at, 11 bars from it. So I would say, we're almost at like 11 sessions from the top of this base. So it would be normal for it to, um, maybe we see behavior like, so what I like about this is you've got on balance volume did not cross below its moving average, and you've got rising on balance volume as a trend, and it's got an upward sloped moving average. The RSI fell through its faster moving average, so its moving averages are rolling over, and then it came back up, found resistance at the faster moving average, and is now breaking below. And you can see that just from very recent history, that sequence tends to mean a move lower. And so that then took us to the middle of this base, right? So that was about 22 sessions to the middle of this drawdown. Um, so maybe what happens is you get like um, a movement a little bit like this, where we come down into this yellow range back up to 1762, and then get up to 1966 by like the early part of November. And then once it's above it, I think it's similar to what we said about Tesla. Like you get like maybe another, you get something like that, right? Like where you get a break above. And it's not quite an Elliott wave pattern, but like you get like a stair steppy type of movement with a breakout, where you get like maybe a retest before a springboard up. You could even like I could even see that being similar to like the sentiment cycle. But yeah, an area as long as it doesn't take out 1355, I'd be comfortable with like adding it at like 15, myself even like I'd be comfortable adding it 1560 and again at 1355. I think the defense and aerospace names have had a hell of a run, but I think that's going to continue to be a really important theme. And the WRD is also a defensive one, right? Oh, we ride, yeah. So we ride is interesting. I think I was hopeful for grab, and that didn't do very well for us. The unbalanced volume of this is the moving average is starting to flatten out. It's up above it, but we want to see that moving average pick up. It did the same thing to us on the RSI where, it fell through both moving averages. You've got um, I'm still in grab as well. You've got the crossover on the moving average and the RSI. So this is not a good look for momentum. And unfortunately, that means that, let's look at this in proportion. So we'll lock the ratio to 1. So 10 cents per dollar or 10 cents per day type of ratio. Um, you've got this movement up was taking it from like about here. You had a 29-day movement, a $29 movement um, at 10 cents per day. Your correction should come out to about here, right? And so the longest that I'd say we ride would take to make before we would be looking for a breakout of like this entire base, um, or challenging the middle part of it at least would probably be until like April of 2026. But as long as we're making new highs and we're in this part of the curve of the the fib circles that are harmonically spaced, I think we start to see it like we hit this resistance at 1230, came right back down to 1037. So it's playing within these ranges. You've got resistance. You put this inverted hammer, it falls right below the arc of this circle. It, fell below our stop. Like I'm looking for it to break above 1230 to participate in it in a move to 1424. And so I think it's going to I think it's going to just stair step its way up through here. And once we get into if we clear $14 by the end of the year, now I think we're into like a parabolic area for it, but you've got to see price like clear these couple of hurdles and get up there. And once it's up past this descending 45-degree angle, then it's in some very, very bullish territory. I don't think there's anything wrong with adding it now. You've got I I've been guilty of being early to a few of these things. Um, I'm not in We Ride right now. Um, so you're above the AVWAP from the low, and it failed the AVWAP from September. It's holding the AVWAP from August. So so we know about it already. Like this is a critical level. If it falls below 1037, we're probably looking at like 843 and down into like or for it to like follow this lower arc. But which could happen if we see like a broader market thing happen. But I'd say like any of these levels, 843 and the 1037 for this name, I'd be pretty comfortable with. I think this is part of a theme that should do okay. Um, see if we have the same story on. I know Grab has not looked well. So yeah, so Grab. Remember, we wanted Grab to get a. We wanted. Where'd it go? I just deleted something. So we wanted Grab to get above this intersection and hold it as support for an opportunity to climb into this upper area, and that's not a good look for it. Um, it's kind of like failing and walking its way down the 45-degree descending angle after failing to reclaim the upward the ascending angle, and it's actually kind of like failed into the angle and below. So I wouldn't be surprised to see Grab come back down to 1550. Then you had Pony in here too. I don't know if I've done a lot of work on the Pony chart. I missed this trade the last time. So we had the let's test our measuring technique for timing. So we had a $10 move, and this is locked in at a 10 cents per day ratio. So that should have been $100 or 100 days through this base. No, it's only 50 days through the base. Yeah, so it's like 145 days to get to the top of the base again. Um, let's take the pony. You've got 154 days to be like 77, 38. So we'd probably get like a you know, like something that takes us back up into the top of this base by the late November, early December time frame. Like if it consolidates across this, which would be really nice if if it does it with like a series of higher lows. Like if it doesn't take out um the low on the 10th, maybe matches it and then makes a higher low, that would be really, really constructive for us to expect to the top of the base by December. And then after that, depending on how things look, maybe challenge up to like 29. And then yeah, your on balance volume shows like a topping pattern, like it's about to slip into distribution and on weakening momentum. So I'd say this probably does um, come in and find a level of support somewhere down here. Let's do the harmonic calculation for it real quick. Uh, Pretty extreme. Well, yeah, so that's what we called it. So yeah, it probably comes back down into like the 1768 area as a worst case. And then we want to see it get above 2440 is where we'd get a breakout and that would take us to like, the third 29 to 30 and potentially even up to like the 38. And that's probably a move that we would see play out um, between I'd say like between December and maybe like that would take us through like the sweet spot of next year through like May. Um, that's pretty cool. And then, did we look at Joby yet? Yeah, we did, right? I had, and then yeah, TEM. I think I've got a call option in this one that's not doing well. So Tempest, yeah. So you've got a case for a high and tight flag here, and yeah. So with high and tights, it's, I'd say we make the case from there though. So the RSI is still bullish. You've got rising moving average in the on balance volume. It's steady accumulation, even though it's retracing a little bit. So this is good. Uh, I like this recent bounce, like off of the AVUF from IPO. The downside, we've got like a very recent example of a failed high and tight flag back here, though it failed to form a flag. Right? It's not like this just signals that we've got the structure that would qualify for one, or the like a price movement that would qualify for one. So I would forecast this like um playing like a high and tight to do maybe something like that. But I'd want to see like I wouldn't even wait when I do this. I look for a breakout of the flag, and I only care about it breaking above the AV WAP and like if it's broken above the descending trend line, and in this case, like you don't have a lot of price action in this flag. You could get like another week's worth of price action in here that goes lower, but um, the break above the trend line, I think is like equally important as ultimately the break above the A VWAP is what matters. But if it breaks above the A VWAP first and then breaks the trend line, I just buy the high and tight flag. If it's breaking out of both of them together, then I sometimes, I might buy the break and then also buy a retest. So I might do like a one-third and two-third size position, maybe like, buy the break, buy the retest, buy the move above the high from the breakout. But in any case, once we get above this, we should uh, forecast the $29 move. That's like a 32% move would be awesome. Makes me feel better about the call that I'm sitting on. All right, have fun, Topher. Yeah, let me see. I just want to make sure I didn't miss anything. All right, let's take a look at we looked at the we looked at the XBI earlier. So there's a few things that gave breakout signals or bullish signals today. That were a little interesting. So I had a bullish signal for the Swiss franc, and we can see the Swiss franc is in like a consolidation right now. So I'm gonna hide some of my drawings for it, and let's try that harmonic approach with it real quick. Take it to where it first consolidates. So you've got 96, 87, and 138. And then that takes us up to 129, 27. So with when the US dollar starts to pick up some steam or when treasury prices start to go up, a safe haven alternative to US dollars is usually the Swiss franc. And so, this could move. Um, I like these harmonic approaches with most assets now. I've started to prefer them over the fibs. But alignment between the two is pretty important. And I feel like commodities move really well with the harmonics. Some of the intraday that has a lot of institutional volume does well in this harmonic approach. And currency seem to do pretty well. So you've got Swiss franc coming up, testing this 113 is where it failed. And so, we were able to see that, and we anchored this harmonic to a closing price in January, and then another, um, its next low of a consolidation in March, and then we used those two figures to forecast a range for it, and that told us that it was going to have problems when it got to 109, and that if it did, it was going to find support at 105, and it told us that we were going to have a challenge at 113, and then come back and visit 109 again. And so that's pretty consistent behavior that we see in multiple assets and multiple asset classes. And that tells me that once we get above 113, a run to 116 to 117 looks pretty strong. And that aligns back to the Fibonacci retrace from 2024 and then from the end of 2024 as well. So I think keep an eye on this if we see some stress in the credit market and some pressure on US dollar. This could be a decent trade. I don't know if there's enough liquidity in the ETF. I don't have a Forex account, so I tend to have to do these with the ETF. And we're not talking about a huge move either, unfortunately. So it's like a 3.5% move. But if it breaks above there, it's you've got probably a pretty low return, but you've got probably a shorter term move chance at like 3.5% with like a 3 to 4 to 1 ratio because you can play a pretty tight stop beneath this harmonic level. But that is more assigned to me like seeing TLT put in, it's maintained this bullish RSI. It's about to cross back. Its on balance volume indicator is about to cross back above its moving average after making a higher low. Um, we're going to see a sustained movement upward in bonds, and this could probably come back up here and challenge the AVU up from the prior high, which would be, like a 6-7% move in treasuries. IEF gave the stronger signal today and had a pretty nice looking candle, like a bearish engulfing on top of a prior confluence zone that I mapped out. And the RSI has the same look. The on balance volume made a lower low, but is now, about to come back above its moving average. So bonds look decent. Gold still looks like insanely strong. It's run into, a harmonic overhead. It might, a retrace to gold, I would think could come back and test this gap, maybe as low as like some of these gappy areas, down here in the 370s. But I think that despite what we might hear, gold's probably still a decent play. And then we know that the banks did pretty well when they reported this week. We've got this breakout of this break above the base retested. Now the XLF is like falling below it. So it's interesting after seeing the banks report pretty well this week. Um, the RSI came back up, found resistance at the faster moving of the moving averages, and on balance volume is falling through into like a distribution pattern for XLF. So we'll have to keep an eye on that. But the base metals, you've got a break above an AV WAP and a retest. And I still think we have a pretty strong forecast for base metals. There's not a lot of liquidity in DBB as an ETF. So be careful if using, just the ETF for it, but some of the metals directly still look really, really good. Got, platinum running a high and tight, maybe even probably could make it up to 163 before seeing a little more resistance. Palladium, we do palladium with like a harmonic approach. Maybe have to go even higher. So like palladium, there's a lot of different ETFs to play palladium with, but as far as like miners and stuff, you've got if you look in the platinum group of metals, um, uh, you'll find any platinum and palladium are usually found together when they're mined. So we've broken above this AVU out from all-time high. We've got the basing pattern, a cup to break out of, and if we use our measured range like we would with equities, we're really at the top of that. Um, that's if we're only looking at this basing pattern from 2023. But I think we really need to consider this basing pattern from 2022. And we've seen it run back up to those bases. We've got a triple top here that fails and becomes the drawdown all the way back to the start of the move from 2018. We could be looking at something like that in metals as countries are defensively adding gold They do that in advance of printing, and when they print, they're going to run the price of commodities and industrial metals up even higher. So even though we're looking at this as like on a Fibonacci scale with a shorter term base and breakout as looking exhausted, like maybe we do see a little retrace at 150. But if we did and it came back down to 133, I would continue to add because I think I don't think like 189 to 200, like I think that's doable for metals in this current run. A shakeout wouldn't be unexpected though. We've got we're a little bit blind because we can't use the commitment of traders report right now because of the government shutdown. So we don't know what the positioning is between producers and at least I don't. Like I don't know what the positioning is between producers and large traders versus small. And it's very clear that retail is aware of the metals trade and starting to chase into it. So resistance at one of these levels when the latecomers pile in could be normal. In this case, you can make a case for an AB for the start of a like an Elliott wave being like let's say this was like an ABC up, an ABC down, 1, 2. If we see a pullback here, that tells us where a wave that where a halfway point between waves 2 and 3 are. So um, uh, contraction areas in the middle of wave 3 tend to be where a wave 4 comes back to. So maybe we do something like this. If we have like a 5 wave scenario for palladium, and that takes us up to the 200s. So I think that's a pretty good opportunity. And I like the diversification of having an industrial metal trade mixed in with some of like the tech and biotech stuff that I do. Yeah, let's take a look at Palantir. I think I think the retrace here in Palantir is interesting. So uh, I've got a lot of drawings on this one. The accumulation is really strong, right? You've got anytime it's getting on balance volume is getting close to its moving average, buyers are stepping in. It's just steadily been in bullish momentum for a very long time. It's been in the bull zone. Let's take a look at, I'm gonna hide the GAN box. So using a pitchfork, um, I've tried the harmonic measurements in multiple drawing tools, and I like them in everything. So um, in this pitchfork, I'm just keeping track of the names that we talked about on the call. In this pitchfork, what I've noticed is when we get into similar to um, similar to when we draw the harmonics and we say these two green lines, you get into the harmonic ranges around the 25 and the 375. Um, Once we get into this zone, that's typically where we see some challenge and a reversal. And it's pretty consistent on when we use these levels in the pitchfork too. You get into um, we form the pitchfork in this case, I formed it from the prior high, and then I used the candle closes um, so I took the high in February of 25, the high in August, and then the August low. And then what we notice is that like as soon as price came back up to this green area in the pitchfork, it had problems and it comes back down to test a lower area. Now it comes up above it, it doesn't come through it easily, right? It's like kind of magnetic. And then as soon as price comes back up to that range, that same range on the other side of the pitchfork, it runs into trouble again. So things like to find support and resistance in consolidation zones particularly in that harmonic range within the octave. And I have no idea why. It just seems like it's a normal area for it. So uh, with like maybe an Elliott wave approach, we could say we could make a case for that being a pretty deep retrace uh, for wave two down. We could make a case for this being, likely for a wave four at some point, right? Because you've got, these consolidating areas tends to revisit. Um, this might even be, we might even be able to make a case for this being wave four, in which case, we're probably looking at a move to the back of the top of, a proportional top to the base to the flag that it's putting in, that's equivalent to the bottom to top of wave one to two, be like a 20.86 move. And if we align that to the direction of this pitchfork, we'd probably be looking at like the end of October to see like 192. I think that's a feasible time frame for it. Because this one started to retrace while some of the other like kind of meme-ish stocks were doing really well. So it might be that some of its downside is played out. Let's take a look at it uh, relative to the S&P. So relative to the S&P, it really kind of looks like the same story, right? Yeah, so it started its retrace a lot sooner than the S&P. Oops. Made its high, almost a full week earlier. So if this could be a name that starts to lead the market higher if it starts to climb before the rest of the market. Um, but I'm probably going to add to my position on this. I like this. If we look at it not, likely not falling below 175, and then maybe a stop below the AVWAP from, where the AVWAPs from the August high and low are starting to converge. So we do like, one ATR right now is like $8. So if that level is 169, then I would like, this is not financial advice for me, but this is where I would like, how I would look at a move failing if I were to structure my levels and stop around it. And that's really low. Um, that's not a great ratio. So I'd probably tighten that up a bit. Yeah, because if this harmonic area fails, then that's really your trigger to exit. So give it a little bit of leeway beneath so we're not shaken out. And you can get into like a 2-to-1 risk reward for, essentially like a 9% move. But I think Palantir, like this movement isn't the end of it. That's just the near term. And I think it's going to navigate like this territory for some time, and probably with a lot of volatility, which presents a lot of opportunity to make money over and over again. Let's look at it on its 34 period moving average. Yeah, so that's angled down a little bit, which isn't good. That's angled down for the first time since since April. So, but it's holding it as support. It's not falling below it. So that's good. Yeah, Palantir looks good. A couple of so we looked at the banks real quick. Um, let's we mentioned Bitcoin when we were looking at the asset classes, and um, this concerns me a little bit on Bitcoin. We've got, now almost a full candle, the majority of a candle body below the handoff of the AVWAP that hands off from the April low, from where we departed the prior anchored VWAP in April. And so I don't like to see support failing on this. It doesn't mean that it can't come back and reclaim it and that this isn't an important area. But now everybody who stepped into Bitcoin during the April lows, if they haven't sold, they're going to start to be at a loss. So that's a powerful buying group, and losing that level is pretty key. So it's down to 108. We've got multiple harmonic ranges in here. I think that a natural area for it to consolidate would be, probably right in here somewhere in between, 100 and 104, using a more traditional chart. Um, the the RSI is in bearish territory. The moving averages are descending, and the faster is crossing below the slower. You've got on-balance volume shifting into distribution, and below it's putting in a lower low after recently putting in a lower high, and it's now below its moving average. So this is similar to what we said on the prior chart or on that other chart. Got kind of a bearish look for Bitcoin, and it's generally going to lead the more speculative asset classes. You also have a triple top failure up here. It failed to break above this triple top, and now if it takes out um, this wick low, then I'd say we'd probably be looking at this is like a $16,000 range in here. Probably a move down to like 96 to 98. Um, but I would be a buyer if we see this anchored VWAP retested. I'd like to buy all of these retests of the AVWAP. But interestingly, the miners are doing okay. Now, if we have a long-term thesis for Bitcoin, and this is interesting to me because if we have a long-term thesis for Bitcoin, and these miners are in like a full-on parabola, right? The price of Bitcoin coming down right now, they're putting in a flag. Um, so this could be a high and tight. They had a high and tight right here. And then we made the forecast from it. So there's a lot of high and tight flags on this chart. Um, so we made a high and tight flag here. Now we break above it really quickly, and here, and so we've exceeded our range. We're coming back down to the top of this one. Um, we could make a case for if this becomes a flag, we likely need to see Bitcoin, find a bottom and start to move up. But if the miners make a flag and then break above it, um, this a $24 forecast would be where I would set, what I would set on a break above that, and that would be a break above the AView app and wherever this descending trend line breaks resistance. So we have to, we're only a couple days into this reversal. Might not end up being a flag, but if it does, like that's the type of behavior I'm looking for. The What's interesting here though is that if the price of Bitcoin is down, the difficulty for miners should be improved, and they should be able to mine more. And then if Bitcoin recovers, they could have a really nice quarter towards the end of the year. So that might be why the miners are doing well at the same time that Bitcoin's retracing. On IBIT, it's going to move the same way as Bitcoin, but I'm looking at these ranges for IBIT a little bit differently and more specifically because I do a lot of calls and puts on timing and technical structure for it. So we're in a kind of a consolidating area that I would consider where I would look for us to see a low around, 59.77 to 61. Um, so this would be a normal area in this format for us to see us make a bounce on IBIT, which would of course require Bitcoin to make a bounce from this level as well. So it's feasible, even though we've lost the support of this AV web, it's feasible that we catch a little bounce in a similar location on IBIT as with Bitcoin and IBIT together. A couple others um, that stood out. We should keep an eye on soybeans. We could see soybeans like do really well if the government steps in to you know to try to bail out the farmers on that are losing money due to the trade relations with China. Those are largely self-imposed by both of those countries, retaliating against one another. So we could always wake up to a headline where soybeans do very well because we've come to some kind of conclusion on rare earths or something like that, So same thing could happen with the rare earth companies. Like we get something beneficial in the trade negotiations and those prices that have run up parabolically um, could correct. And I'd say this would be the counter trade to that. And you've got like I've been a little bit early on agricultural commodities before, so um, definitely don't do anything because I've shown it on this, but it's not an area where I'm known for being um, right on time. But if we look at the trend line that it's building off of the lows, um, you've got um, you've got three solid tests of this trend line. It's now trend line is extending above the AVWAP from the low back here during COVID, and your overhead AVWAPs are starting to tighten up. So we're stuck at 21. The highest AVWAP is 23. That's about a 10% move. You've got um, kind of a bullish structure to your RSI, tightening up into like a little triangle right in the RSI. Um, and your faster moving average is curling upward. The RSI and the fast moving average are about to break through the slower moving average, and you've got just a little bit of a reversal in the on balance volume after a deep drop. So I think this is like a little bit of momentum building around the possibility of a government intervention. And I think that's something I might play that if I see us make a break above this AV app. I'll probably sell into this one, take profits pretty quickly. There's people that have been frustrated by this trade for a while, and it probably doesn't come to a conclusion very quickly. But definitely a good one to keep on the radar. Lilly had a Trump tweet after hours, and I think Lilly reports earnings. So we talked about the biotechs, and this is a big position for us, a pretty important one. Um, I've traded in and out of it a little bit with the price action this year. And the next earnings are the 30th. Today we had the Trump tweet about trying to make the obesity drugs more price favorable for the U.S. and that brought an after hours price hit for Lilly and for um, Novo Nordisk. I didn't check Vertex yet. So we had price fell from it closed like 6:30, right? And I'm sorry, 8:18, and then fell to all the way down to, so this is busy, but we've got this harmonic, this pitchfork, right? Method again. And in this case, I just to change the color on the chart, I took those harmonic ranges where we run into trouble and I made those red. And so you can see that it's respecting this pitchfork really, really well. And, it gets down into this red and that's where it consolidates and it has a lot of trouble there and eventually doesn't clear it. Fails into its overhead AV WAPs and makes that big low on the eighth. And like I even capitulated and sold similarly down here at a loss before coming back in and catching this move. Um, so, which I normally don't get shaken out of very long-term positions, but this one's been pretty frustrating. So we've got the circles, the concentric circles that are all harmonically spaced. We can see it finding support and resistance at each of those, as well as the harmonically spaced pitchfork and then a harmonically spaced range. And so this kind of gets us to timing, right? Where we know that um, in between this time frame before we pass this circle, we're probably going to operate within the 776 to 852 area. And I'm thinking that, knowing what we know about how common it is in Elliott wave for your wave four to come back and revisit an area of consolidation in wave three. I'm thinking that and I drew this purple arrow out the other day before this move down and said, I could see us coming down and testing this angled pitchfork one more time before forming some type of pennant that frustrates everybody and breaking out back into this area of this harmonic range within the pitchfork where we tend to have trouble. And so if we see that happen, then we probably around like the late November timeframe curl back down along the concentric circle in the fib circles before making like a proportional wave five in terms of magnitude of price movement, but I'd say it's probably, like a more extended move that takes us into the early part of next year. So that's what I'm looking for from Lilly. If it falls below 776, then I think we're in trouble. I think it probably then comes back down to test these lower AV WAPs one more time. But if we're going to see a sustained move from biotechs as a sector, if like the health ETFs and the biotech ETFs are going to do well, then Lilly's like the Nvidia-sized market cap of biotechs, and it's a name that we need to see do well for biotechs for a biotech thesis. But this so far this harmonically proportioned method has done well with this asset, and I've only done that for a few months with it. Trying to think if there's another one that. Oh, so we talked about the fintechs, and I think nope, that's Toast, but it's Wheaton Precious Metals. We've got this failed move, like Toast failed to break its break out of a base, and then made the full forecasted downward movement. So if we're looking at this as like a basing pattern, you've got a call it like 160-day base that's created, which then gets us to like a 40-day 40 bar harmonic. It's kind of like where we got to and it failed. And so then if we consider that to be our harmonic, now we should be at the low of this base by the early part of November. And so so I think if we're going to look, like in my case, I'm looking at an opportunity for something speculative that's not like a quantum name or in the Bitcoin in the crypto space or in the defense space. And I think this fits the bill. It's a been popular in the past, and you've had three drives lower. You can make a case for this being an ABC, um, down into this gap fill from back in May where it gapped up. And so we'll probably run into a little bit of trouble at 41, between 40 and 41, where this AVWAP from all-time high is coming down. It's reclaimed the AVWAP from the June 2024 low. Um, so I'm going to say if this is making a higher low between now and the first week of November, I'm going to take that as a pretty bullish sign. I've already got some longer term call options between like 50 and 60. But I think this is a name that we could see resurface and make a play. Like I could see this being like a really deep retrace as like a wave one into wave two type of thing. Maybe you get like like a break above the base and then a wave five or something like that. Probably not that high. But in that would play out as a scenario. And again, like I just always like scenarios and not predictions, because if we see this scenario behave this way, then we know what to do with ourselves, right? So like, let's say like a wave three comes, well, this isn't really a measured area, but like, wave three comes back up to that original forecast, retested the base like midway through this next cycle, and then maybe something like something like that. But I think Toast is an interesting like longer term opportunity. Um, One that caught my interest, like we've done really, really well with ASTS. I haven't even updated the chart. I know I've done well with the position when I stop updating the chart and it's that high. So I started just taking profit on it. But I think this probably gives us a case for like a big high and tight flag, probably comes back down to like the 84 area. Um, I like the fundamentals on GILT even more, and then had to remind myself that fundamentals don't seem to matter a whole lot in this market. But with so many speculative names doing well, but I think if the satellite names get punished and fundamentals suddenly become important, GILT is a name that'll probably do pretty well. So an opportunity to grab some between like 1285 and 1360 is something I'm looking for. I've already got some long calls on this, but a couple of the satellite names that haven't done it yet, like if I think this is a pretty important industry, it's going to continue to get a lot of investment. So you've got SATL, who call this a base of like 560 days. Um, then we'd be looking for like 140 day base out of here as a 1/4 movement. And I'm doing like just manually eyeball kind of things here, but like it's maybe even longer, right? So 666, like the base of the beast. So it'd be like 166 day, like 165-day consolidation if it's within a 1/4 proportion of like the formation of the base. So if we were to think about these as like, um, being similarly dimensioned, then if the satellite names are going to make another run higher, sometimes like, when like the meme names have done well, like a name that's not been touched yet and hasn't participated in the move catches up. We saw that with like BBAI this past week, um, a little bit with like QS. So maybe well, this is all the way out until like June of next year. but I'd say maybe like, between now and the end of this year, maybe we see this name do something interesting. Same with Lumen. We've got this, this great big base that it's putting in. It's like three-quarters of the way back up to the top of it. It's back above the A view up from all-time high. If we look at that as a kind of a mini cycle, let's see if it's in here. Yeah, so we've got it in the time trades AI model. And that model, if we look at influencers, Saturn, NATO. So if we look at, if we look at the probabilities with lumens, we've got net probability in the time trades AI. In the past, when we've had a higher probability of a two standard deviation move, um, that's done, that's been pretty accurate, pretty good call for us. Um, Not seeing a lot of failure on those. And likewise with overhead pressure on it. So when we're getting a flag formation as we've got some downward pressure forecast in the AI, and now we've got, nothing but upward forecasts of like some upward pressure. So, some uplift. So maybe we get up to like $8 to $9 by the November timeframe before it sees, the first type of resistance. So that's one way to look at this satellite name. Take a look at the cycle tool for it. 300-day cycle, a 180. Oh, I like the 145. So if we look at Lumen with these, with the two most dominant cycles, um, this calls for like a swing high into the early part of next year with a 60% correlation to the time series, and it's broken above the upper range. The RSI, cyclic RSI, is broken above its upper band. So you've got the astrological AI anticipating a drift higher. You've got like a mathematical composite of a cycle anticipating a swing high at the midpoint in between a swing high and swing low, right as it's like, um, at the midpoint of its base. So I think this is, among the satellite names, here's another one that just, hasn't had the same movement that we've seen from ASTS and Rocket Labs and those guys. So possibly, I think we said like on the time trades one, maybe we get up into like, up to 880, 90 or 885 to maybe like $9, which would bring us to the consolidating area in this fib level, like right between the 850 and the 911. So from where it is here, that's like a 20 to 30% move. So I like that as an opportunity. Um, Especially if we're seeing funds rotate on the options names, if we start to see funds rotating out of ASTS and Rocket Lab and things like that. Um, I think steel, for industrials to do, if these base metals and things like that are doing really well, we should see steel approach this $80 target up here, which would be, a $9 move for it, over 10%. And that would probably take a name like Nucor with it. Nucor failed at its AVWAP from the 2024 high, and it's coming back down here to retest the one from the November 2024 high. So if this one finds support, this is aligning with the 618. So if it finds support down here, I do think we have an opportunity for us to still see Nucor get back up here to this 163, and that could even take the, kind of like a guideline approach with an 08 wave scenario. This is, your area of concentration, or I'm sorry, consolidation within within your uptrends. So, where the price started to have a little bit of trouble and come back into a consolidation around this 129 area is where we're seeing it. And so once that's played out, then if steel is going to head higher, Nucor probably heads higher, and this would be like, almost a $30 move. It's just a really dense area of volume too. So once cleared too, I mean, this is an opportunity to play into a base, but this may be even one that, if things get really big on the construction and development side, as more of these data centers get built out, if that leads into other types of industrial development, then we could see Nucor, challenge for an all-time high with a steep move above the base. I think that's everything that I, found that was kind of interesting to take a look at. I did see an alert on Google today. It's possible we have something pretty cool on Google right now too. If we take it like, so here we're getting like almost into, you can see where I've had like some successful trades where I should have probably just hung on to Google. So we've gotten back above this base. Um, And, our measured range from the top of the base should really take us up to this like, 274 area. And that would be, similar to where we would forecast a break above a high and tight flag. So, we could be looking at like, if it comes back down to test this AV WAP down here, um, like a springboard from there up to complete the forecast, maybe into like the early December timeframe. So I like Google for a move over here as well. But I think that's everything that I had on my list. Do you guys have anything else? I'm just checking the chat again. Anything else we want to take a peek at? All right, well, good stuff. If you guys have any questions, I'll save the recording and get that posted over the next day or two. If you guys think of anything that we want to take a look at or that stands out to you over the next few days, don't feel free to reach out and let me know. If the market gets really crazy and choppy and we see some risk, I'll do a call if we need to, so we can work through it real time. But I appreciate you guys joining and bringing some great suggestions. It gives me a lot of great ideas. But yeah, thank you very much, and have a good night.